Welcome to episode 106 of the Weekly Tax Update. Yours truly, John Sheeley, presenting. And again, thank you again for joining us each and every Friday at 3 p.m. Eastern Time. This is me. If you need to find me, by all means, please scan the QR code. It'll populate my information into your cell phone. Always happy to take your call and give you some help if we can. This is sort of a repeat, but I want to update this that although the IRS is receiving submissions of returns up until 11:59 a.m. on the 26th, I am hearing reports that some of the other companies, those the Pro Series and some of these things, I'm hearing the 20th, the 21st, the 22nd as the last day to transmit. Probably they want to make sure the returns get out. 21st makes sense for a lot of vendors because you have that 5-day perfection period if it bounces to get returns out. This was super urgent, so I moved it to the front. So the post office is changing its rules effective December 24th on how they apply postmarks. So mail that's dropped in a mailbox out on the street or in a lobby will not be postmarked until it gets to the central mail facility. Now, we had this problem in the past where sometimes they just didn't do it in the local post office when you dropped it in the box inside. And if it got to the sorting center after midnight, our sorting center used to be locally here in the county. Now, depending where the mail is going, it goes 90 miles north, 70 miles south. So it could be after midnight. So it gets the automated postmark for tomorrow. That's a problem. We used to get that, you rely on that postmark rule. I put it in the mailbox today. It's timely filed today. So we've told folks for years that you want to walk into the lobby, hand it to an employee, or better, send it certified mail, electronic return receipt requested, where I can check it online and understand what understand when it was received and track it online. So I think I'm going to add this to the tax update for next week. This has got to be something we communicate to clients if they're mailing in a return. Certainly, we electronically file as many things as possible, but there are some things, older returns, state returns, Form 3520 as foreign gifts reporting. It's very popular in our practice, and we're going to tell people they got to walk in and send it certified mail. We used to suggest, now we're going to insist that they do this. So just so you're aware. I've beat this up the last couple of weeks. I want to remind you again, your PTIN needs to be renewed before December 31st, before you accept fees for preparing tax returns. Take you 15 minutes is their estimate. Took a little less for me. $19.75 was last year's fee. They dropped it $1. So $18.75 to get your renewal done. Go do that today as soon as the program is over, please. We won't beat up why this is important, or that it's the enrolled agent renewal season if your EA, if your social security number ends in 4, 5, or 6. You want to make sure that you renew. Important timeline. Your status depends on it. Your EA will expire March 31st, a third of us. However, you need to renew by December 31st. Get your CE in. You actually have till January 31st to get that in. But renewal period is open. You have until January 31st to renew. Your current license expires March 31st. And if you miss that, you have to stop representing taxpayers until you resolve your renewal. Now, the past couple of years, the IRS has been woefully behind in getting cards out, 3, 4, 5 months. So if you have not renewed yet, do that next week. Get your renewal done. You probably have to, if you don't have enough CE in, we have programs available for free on the website, taxpracticepro.com. If you're a subscriber, you will have a substantially larger number of classes to choose from. We do have ethics available as well, this year's ethics, last year's ethics. So by all means, go take a program, get caught up, get renewed, please. $140 fee this year to renew for 3 years. It's a pretty inexpensive license if you think about it, for 3 years worth of coverage. Process is outlined for you. Your continuing education details, we mentioned this before, I won't mention it again, they're available. Please, please, please don't miss your deadline. All right. So final, please, here are the resources. Here's where to read about the IRS renewal, and here's where the 8554 page is. Identity theft processing has not changed since last week. I think it's the most disgraceful thing the IRS has going on right now is how long it takes us to resolve these things for folks. A couple of big issues this week. We're going to talk about some federal health plan updates that are out there that are positive for taxpayers. Information for a change. Information reporting changes on 1099K. There's actually a update to the 1099K frequently asked questions. California Payroll has some new reporting requirements I want to mention. And there's some federal legislation items, some new things out there that are pending that I wanted to mention. So the One Big Beautiful Bill Act made a change, a positive change regarding health savings accounts. So under OBA, there are 3 changes that we need to look at, and these modifications are going to broaden access, hopefully, to tax-advantaged health savings accounts. So first, telehealth, the safe harbor that they introduced during COVID has now been made permanent. So high deductible health plans can permanently offer telehealth and remote care coverage before the deductible is met, retroactive back to years after December 31st, 2024. In other words, all of this year. So if you had those things, you haven't hit your high deductible yet, but for telehealth, because they're encouraging the use of telehealth, you can go and use your health savings account to pay for this. It excludes, of course, this exception excludes in-person services, medical equipment, and drugs, unless they relate to the telehealth services. High deductible health plan clients can access telehealth benefits while maintaining their HSA contribution eligibility. And again, we're going to drive people towards telehealth. Bronze plans, and if you have that lower catastrophic plan, they now automatically qualify regardless of anything else. A bronze and a catastrophic plan now qualify as a high deductible health plan, which means you can have a health savings account in coordination with the bronze account. So exchange purchased bronze plans and exchange purchased catastrophic plans. This expands the HSA availability or eligibility, and you should look at this when you're talking to your clients this year, because maybe they want to do this to minimize their tax bill and possibly maximize their retirement benefits or what they do with it. There's a fellow on Twitter, Mike Sylvester, a CPA in Indiana, and he's got like $250,000 in his HSA and $250,000 in his wife's. They've added to it every year since it existed, and they've never accessed it, figuring they might need it during retirement, and they have the cash flow to pay for their medical bills. Now, interesting tool, interesting way to use the tool. So I don't know anyone that has a direct primary care service arrangement, but this used to be concierge medicine, right? To pay you a $4,000 fee so I can, have you as my doctor. So they no longer disqualify health savings account contributions. I can have that type of medical arrangement, and I can still use a health savings account. So I can also use that to pay the membership fee. Now, there's an issue, though, that if the fees exceed $150 a month for individuals and $300 a month for a family, they will be disqualified. But in the short run, for many of us that are using this level of concierge medicine, we still will be able to tap our health savings account to do so. Yeah, I thought I deleted the image. Maybe I deleted the text for that slide. 1099K threshold. This is going up and down. It's going to go to $5,000. It's not going to go to $5,000. It's $20,000 and 200 transactions. If you get to both of those thresholds, we're going to issue you a 1099K. Now, some interesting things came out of the FAQ. You actually can issue it at lower thresholds. Wasn't clear? Now it's clear. So for providers that want to issue this to make sure all of their members know they're getting one, they can do that. So Unlike third-party settlement organizations, there isn't a de minimis exception for payment card transactions. So credit card, debit card, stored cards, even a single payment requires Form 1099-K reporting from a payment processor, regardless of their volume or their account. Also new. So there's a change to, I should have put up a copy of the tax form. There's a change this year on 2025 tax returns. So 1099-K in 2024, if you had an incorrect 1099-K, the instructions said put it on, and then down the line 8Z or so, back it off. But now we have a box at the top of Schedule 1 where they want you to put the erroneous payments to back them off. Previously mentioned, though, for years after December 31st, so starting now for 2026, we now have a $2,000 threshold for Forms 1099 Miscellaneous, 1099 and EC. I just had this discussion with a client for whom we issue 400 or so 1099s, and you would think they would be ecstatic. Well, as it is, when they have people that get only a couple of $100 and we don't issue the 1099, or they have an S corporation, they don't get a 1099, they or their tax preparer flip out. We can't do the return without the 1099, and you roll your eyes. So for this particular client, we issue 1099s to everybody. And I prefer that we do an education campaign for them and explain to them that you don't get a 1099 if you're an entity or if you don't hit the thresholds. So ideally, this is going to, businesses will do fewer 1099 forms. That one-off person who you paid $599 to every year, why, he can get a raise. But seriously, all of those smaller amounts where, even the best compliant taxpayer, it seems every January you're like, oh, remember Mark? Oh, yeah. You paid him $800 this year. Oh, that can't be. You go and look, and yes, we did. So now we have to track down this person for an $800 payment. That $600 number had been the same as long as I've been doing tax returns. So raising it to $2,000 was probably smart. Also indexing it for inflation starting in 2027 was probably also smart. We've previously discussed in other programs how the IRS currently only works 15% of the cases identified by automated underreporter anyway. So now their rate can go up, right? Because there'll be less 1099s coming in and maybe less mismatches. All right, we spoke about. All right, so some big state compliance change in California. So California motion picture payroll reporting. This is important. Senate Bill 422 mandates quarterly reporting for California motion picture payroll services and companies starting January 1st, 2026. This may affect some of your clients, so just bear with me for a minute. So very popular is something called a loan out company in movie and entertainment parlance. What's a loan out company? You pay their LLC or you pay their S corp, right? Their personal service corp. That corp provides me, right? If you engage with my corporation, you're going to send me. You engage with John Sheeley Live, you get John Sheeley as the speaker. That's a real company, by the way, John Sheeley Live. So they now have this report of payments to loan out companies. Form DE 422 is going to be filed every quarter with the Employment Development Department, the EDD, and this is going to create a paper trail for loan out arrangements in the entertainment industry. Why? Among other things, there's probably no 1099 reporting. So under the law, an entity treated as an employer for motion picture workers, if the criteria is met, that's the MPPSC, they have to file an application within 15 days of paying out the first person. The loan out company is who our clients are, a corporation or an LLC providing personal services to a motion picture production company where the principal worker owns over 10% of the stock. California Unemployment Insurance Code is now requiring the MPPSC to be treated as the legal employer for unemployment insurance purposes. What are they going to do? They're going to make sure everybody is filing quarterly payroll reports because they're not going to follow the money. You weren't treated as a worker by the motion picture, that's fine. We paid the loan out company. There better be payroll from the loan out company. All right, so I've outlined the reporting requirements here. I don't want to bore you with them. New filing deadlines. So you have April 1st to April 12th. The first one is due April 1st. And then here are the quarterly dates. They're actually, you can file a late report and get a small penalty. And you have to put systems in place to do this. Nationwide, minimum wage is increasing. 19 states are increasing minimum wages effective January 1st, 2026. If you're doing payroll, you want to make sure that you have those those employers doing that, paying that larger amount. A number of states have expanded paid medical leave or created paid medical leave mandates. Minnesota is one. Delaware has created them as well. And Colorado is leaving the expansion. So those that have newborns under the neonatal intensive care unit care are going to add that leave. You're going to be able to take that time off under Colorado's law. I don't know about the states that everyone is in. Here in New York, folks look at the numbers, and it is kind of expensive to put these things together. And I don't see a lot of clients taking advantage of it. I wonder if there's a disconnect with notifying people that this exists or not. Illinois passed a law that I find interesting only because I'm interested in AI in the workplace. So Illinois Human Rights Act. Illinois is updating the Human Rights Act to prohibit discriminatory AI use in employment decisions and mandate notice when AI is utilized for hiring, performance evaluations, promotions, or discipline. I think it's very interesting because they're not using ChatGPT to do this, although they could, but AI tools are being used to in going through resumes. Now, we use Indeed. We ran an ad for someone to work here at Tax Practice Pro, and Indeed tells me, based on the criteria I plugged in when I set up the ad, I'm not paying attention. It asked me, do they need to do this, this, this? Yes, 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 yes. No idea why I checked those boxes. Well, guess why they checked those boxes? I'm seeing on the right-hand column next to resumes, meets 7 criteria, meets no criteria, meets all criteria. That is the AI helping you. Now, is that going to qualify here? Probably. My daughter was applying for jobs at hospitals, and she felt that she wasn't putting the right words there. She says, the AI is, I'm a new grad, the AI is discriminating against me. But she's probably right. But anyway, Oregon and Washington are now allowing striking employees to receive unemployment compensation. That's marvelous. That's a new thing, but that's probably a great thing, especially if Starbucks unionizes. All right, very important couple of things coming up. So, of course, there were votes today. They voted actually on 2 bills, a Democrat version and a Republican version. Neither passed. So we still don't have any kind of extension on the premium tax credits. I'll remind you, I try not to be political, I will remind you that 19 of the 20 separate taxes, the NIT tax, among other things, still didn't go away. The net investment income tax did not go away, but those taxes that fund the Affordable Care Act premiums. So it's interesting, we have the tax, we don't have the premiums. So terrible stories on NPR and other places today about, they're incorrectly reporting it. They're saying people's premiums are going up 200%, 300%. That's not fair. The premiums didn't go up that high. Just the lack of the credit means the out-of-pocket amount is going up 200 or 300%. And I think more accurate reporting would say that. So we have new legislation that has not passed yet, but in case your clients ask, protect innocent victims of taxation after wildfire extension Act. So isn't that great? PIVTAF aims to permanently exempt wildfire loss compensation from taxation. I think that's a great idea, but and it just be easier to amend the current code, but that's not what they're looking to do. So that did not pass yet. Now, the Hustle Act. Big thing out there, name, image, likeness, and the use of tax-advantaged accounts. So the Hustle Act is a proposed law that proposes a tax-advantaged investment accounts for college athletes to be able to save a portion of their NIL earnings. Benefits will be similar to a retirement account, probably similar to the Trump account. Athletes can contribute the earnings to these accounts, get a tax deduction or a deferral. They grow tax-free, similar to an IRA. And then sometime after college, they would be able to take the money out with a tax-favorable treatment, potentially, depending how it works. If it works more like a Roth mechanism, maybe it would grow and they would have no tax on it, or be able to roll it into a traditional retirement plan. So these things are getting a lot of interest right now. I couldn't find the details again. I heard the radio yesterday, a woman who is still a college athlete bought a minority stake in one of the Major League Soccer teams in the U.S. because she had enough earnings from name, image, likeness. So interesting stuff. All right, so what did we do today? We talked about some of the guidance, the new health savings account guidance. Biggest takeaway to me, bronze plans bought on the exchange now automatically qualify, allow you to have a health savings account. That's a fabulous thing. There's a new changes to the FAQ on 1099K treatment. That's on the IRS website. If you have any of your clients are involved with California loan-out companies in the entertainment industry, understand there's new reporting that's going to be made to California that their corporation or LLC is receiving payments in lieu of direct payroll. So you want to make sure those entities are compliant with payroll. IRS is, we talked about this last week, the IRS is requiring direct deposit for refunds. Okay. Thanks for attending. And I gave you those key reminders. Everybody have a great week. We'll be here next week on the 19th. Look forward to seeing you. If you're needing tax update, part 1 of our 6-hour tax update is available online. If you are a subscriber, it's no charge. If you're not a subscriber, you should become one. $52 a month gets you access to all of our live continuing education programs. For everybody else, part 2 is available next Wednesday. I'll be doing it live, 2 p.m. Eastern time, but then it'll be available on demand within 24 hours. Have a great weekend, everyone.